afternoon, ladies and gentlemen. Once again, the biggest thanks to organizers, Signet Bank, and all the supporters for putting together this fantastic event. It's been real pleasure, to participate in the fantastic and engaging discussions this far. I represent Nasdaq CSD, Central Securities Depository, which actually operates in all three Baltic countries and also in Iceland. And CSD is part of so-called post-trade, which actually has a relatively big role to facilitate dual listings. And post-trade stands for everything that happens after the trade is concluded, say, on stock exchange. So it relates to the central securities depositories that are responsible for settlement, and in some markets, clearing houses and brokers' back offices and custodian banks that ensure international settlements and dividend payments and stock splits and whatnot. So you may not think of this in this way, but it's a fascinating world. And we'll cover that in a bit more detail in a minute. Before that, a few more general remarks about dual listing, or triple listing, or multi-listing, or cross-listing. All those terms stand for a situation when a company is listed in more than one stock exchange. And for example, the same well-known Nokia used to be in parallel listed in Paris and in London and in Frankfurt and in Stockholm and of course in Helsinki and in New York. So there is a great deal of history behind the dual listings, because in good old days, when the financial markets and especially investor community were not as interlinked, were much more local, then companies, in order to broaden their investor base, had no other choice than actually to go where the investors were. So dual listings were the means. Over the last few decades, with all the technology breakthrough, one could say that that reasoning is a bit less relevant, because of course brokers are much more connected these days. Pretty much can buy any stock anywhere in the world. But I would argue that still in certain situations, for certain markets, for certain companies, there is a big relevance for dual listings. And actually, Magnus, our colleague in the opening panel, already spoke about a few success stories in Iceland where it made sense for a mining company to be listed both in Toronto and in Reykjavik, and Malvotech is listed in New York and in Reykjavik. And if we look at the Baltic markets, probably we should call it a spade. And the markets are, they can absorb as much funds as they can, and this far, Baltic markets have as many international investors as they have. So it actually can be a good option for a company to opt for dual listing. Often, preconditions would be that it's sizable enough, the sector would be right for listing in that or that venue. And if those prerequisites are fulfilled, then it actually can provide the best of the two worlds. And we as a Nasdaq, as the operator, we certainly support these cases. Because from our perspective, we look at the sort of aftermath of those dual listings, we actually can see that the liquidity and the trading activity, almost as a rule, gravitates back to the home market. That was also highlighted by Magnus in the opening presentation, that it can be 60%, it can be 70%, sometimes even over 90% of the trading comes back to the home market. And we actually have good, hard data set from our own experience. If you recall, some years ago, there was a high degree of protectionism in the Polish market, and then the only way for our companies to tap into the pension fund money in Poland was to duly list the companies. So we had over 10 listings. Now it has dropped to just a couple of them. And we supported that process. We as a CSD, we opened a link with the Polish CSD, and we still have it. And I'll here show a few slides. Well, it may look a bit technical, but please bear with that. And good you didn't see the first version where really everything was explained. So when we look at sort of what are the options to facilitate the post-trade for the dual listings, one is the linkage between the CSDs in the respective markets, like that example with Poland. Or we also, as Nasdaq CSD, we have a link with Clearstream that is connected pretty much to any market in the world. And in some way, this is the preferred option. It typically would be less expensive for the company. It's a good option from the risk management because it is exactly the same security that is issued, for example, in Estonia, and then that is later on traded and settled in the other market. The challenge with this CSD linkage solution is that we can't force whoever is that other market or the CSD in the other market, we can't force them to accept the Baltic issued securities. We can try to persuade them, they might be willing to do that, but we can't force them because to run that link between the CSDs, it involves certain complexities. And despite over the last few decades, we've made a long way in terms of harmonizing the European markets. You know, we've had capital market unions and MiFIDs and corporate action harmonizations and target 2 securities, etc. But there are still some very fundamental elements important to capital markets that remain very local. For example, local company law that regulates the issuance of the shares, or at times a very relevant topic like insolvency handling regimes, or taxation with all the withholding tax elements and things like that. So that other CSD should understand all those details of the other markets, keep up to date themselves, you know, follow any changes in the laws and regulation, and that might be actually quite expensive. So what we see as a trend lately in European markets is that many of those links are closed down because they are like empty or half empty, and there's literally no business case for the central securities depositories to keep them running. For example, one of the sort of latest developments was the Swedish CSD was closing down several links, which of course then it creates a problem for the companies, for the foreign companies that are listed, for example, in Nasdaq Stockholm, because if there's no linkage, then you need to find another solution, which then typically is so-called DRs, the depository receipts. Most common is GDRs, general depository receipts, but it can be also local versions of DRs, like Finnish depository receipts, which are used by Tallink, that is dually listed in Helsinki, or can be American DRs. And this is a good option, very often the only available option to support the dual listing, just that the issuer needs to sort of finance it, and it might get costly. You need to find a bank that would support it. You obviously need to work with lawyers a lot. And maybe from risk management, it's a bit trickier case compared to the direct CSD links, because it's almost the same security, but it's not. So it's like issued anew. So you need to deal with the situation. You know, what if that bank ran into problems, how you would deal with those situations, and so on. And then let me very briefly cover the other situation when it is actually foreign company that would like to list in the Baltics. We don't have those situations yet. We have some fixed income issuance that is first registered abroad and then would seek for listing here in the Baltics. This could be a relevant case, for example, for emerging unicorns in the Baltics that maybe have business here. They're typically coming from here, but as legal entities, they are incorporated in some other country like the US or the UK or somewhere else. So the picture is pretty much the same and options are the same from post-trade perspective. It can be linked between the CSDs or depository receipts. The only difference I would emphasize is that in this scenario, we as a central securities depository, we are in a better position to support it because, as I mentioned, we can't force other markets to accept our securities if they don't want to. Whereas we can always ask, at least within EU, to get access to those other foreign securities. And, you know, maybe they could drag a bit the process, but we have that right. So eventually we should be able to get there, that we can get hold of those securities. And then already, you know, support the company, and from that moment on, it continues as our local settlement. And actually, we have a link with Clearstream, which is one of the largest CSDs in the world that are connected to all markets. So that was exactly the solution that Magnus referred to in Icelandic case, when we could facilitate foreign companies listing in Reykjavik using the CSD solution, Nasdaq CSD solution, and the Clearstream link. I leave it there for now, so thank you.
Thank you.